Buckle up, investors. It's time to dive into the high-stakes world of corporate power plays and strategic maneuvers. Brace yourselves as we unravel the intriguing tale of Jardine Matheson, the mighty conglomerate that has been steadily tightening its grip on its subsidiary, Jardine Cycle Carriage. In a series of calculated moves, this financial behemoth has been relentlessly acquiring shares, increasing its stake to a commanding 82% ownership. But why, you might ask, would a corporate titan like Jardine Matheson be so fixated on strengthening its hold over a company like Jardine C&C? Well, my fellow investors, the answer lies in the vast potential of the automotive industry in Southeast Asia, a region brimming with economic promise and untapped opportunities. Jardine C&C, with its extensive network of automotive businesses spanning distribution, manufacturing, retailing, and rental services, is poised to capitalize on this burgeoning market. So, fasten your seatbelts and prepare for a wild ride as we dissect the strategic brilliance behind Jardine Matheson's power play. Brace yourselves for an in-depth exploration of the region's automotive landscape, the potential roadblocks, and the lucrative rewards that await those who navigate these waters skillfully. Get ready to level up your investing prowess and gain invaluable insights that could shape your financial future. In a series of calculated moves, Jardine Matheson has been relentlessly acquiring shares, increasing its stake to a commanding 82% ownership in Jardine C&C. But why, you might ask, would a corporate titan like Jardine Matheson be so fixated on strengthening its hold over a company like Jardine C&C? Well, the answer lies in the vast potential of the automotive industry in Southeast Asia, a region brimming with economic promise and untapped opportunities. Jardine Cycle Carriage, Jardine C&C, is a prominent player in the automotive industry across Southeast Asia, boasting an extensive network of businesses that encompass various aspects of the sector. From distribution and manufacturing to retailing and rental services, the company has established a strong foothold in this dynamic market. One of the key strengths of Jardine C&C lies in its diverse portfolio of well-known brands, including Astra, Cycle Carriage, and Tunas. These brands have become synonymous with quality and reliability, catering to the evolving needs of consumers in the region. With a significant presence in key markets such as Indonesia and Vietnam, Jardine C&C has positioned itself as a major force in the automotive landscape of Southeast Asia. As the economies of these nations continue to grow and consumer demand for vehicles rises, Jardine C&C stands to benefit greatly. The company's vertically integrated operations, spanning the entire value chain, provide it with a competitive edge. From sourcing and manufacturing to distribution and after-sales services, Jardine C&C offers a comprehensive solution for automotive needs. Moreover, the company's deep understanding of local market dynamics and consumer preferences allows it to tailor its offerings effectively. By leveraging its extensive experience and industry expertise, Jardine C&C can anticipate and respond to emerging trends, ensuring that it remains at the forefront of the region's automotive industry. Jardine Matheson increases stake. Let's dive deeper into the recent strategic move by Jardine Matheson to increase its stake in Jardine Cycle Carriage, Jardine C&C. Through its subsidiary, Jardine Strategic Singapore, the conglomerate giant made a significant purchase of an additional 444,900 shares on June 12. This acquisition didn't come cheap, with Jardine Matheson shelling out a cool $27 per share, amounting to a total investment of around $12 million. But this move was just the latest in a series of calculated share buybacks by the company. Since the start of 2024, Jardine Matheson has been on a buying spree, snapping up over 5.4 million shares of Jardine C&C from the open market. With this latest purchase, their ownership stake in the subsidiary has now risen to an impressive 82%, up from around 81.6% previously. Now, you might be wondering, what's so special about Jardine C&C that has Jardine Matheson doubling down on their investment? Well, let me give you some context. Jardine C&C is a major player in the automotive industry across Southeast Asia, with a diverse range of businesses spanning car distribution, manufacturing, retailing, and rental services. They operate under well-known brands like Astra, Cycle Carriage, and Tunas, giving them a strong foothold in this rapidly growing region. Why the increased stake? Jardine Matheson's decision to steadily increase its stake in Jardine Cycle Carriage appears to be a strategic move driven by several factors. Firstly, the parent company likely recognizes the long-term potential of Jardine C&C's automotive and related businesses across Southeast Asia. As economies in the region continue to recover from the pandemic, the demand for vehicles and associated services is expected to rise. By strengthening its ownership, Jardine Matheson positions itself to capitalize on this growth opportunity. Moreover, consolidating control and ownership aligns with Jardine Matheson's broader group structure and strategy. Having a more significant stake in a key subsidiary like Jardine C&C allows for better coordination, resource allocation, and decision-making across the conglomerate's various business units. This move could streamline operations and enhance overall efficiency. Additionally, the share buybacks may be a prudent way for Jardine Matheson to deploy its excess capital effectively. By acquiring more shares of Jardine C&C at what it perceives as attractive prices, the company can potentially generate long-term returns while reinforcing its commitment to a core business segment. This strategic investment could yield dividends in the years to come, both figuratively and literally. Jardine C&C's performance. Jardine Matheson's interest in increasing stake in Jardine Cycle Carriage stems from their belief that the company holds promising long-term prospects. Despite Jardine C&C witnessing mixed performance across its core businesses recently, Jardine Matheson seems confident in its subsidiaries' quality and potential. In their Q1 2024 update, Jardine C&C reported that its Indonesian subsidiary Astra saw a 5% decline in underlying profits, while its Vietnam auto business Thaco experienced flat sales volumes. However, the company's cement business Siam City Cement delivered improved profits. Jardine Matheson likely finds Jardine C&C as an attractive investment opportunity at current prices, given the latter's strong foothold in Southeast Asia's automotive sector. Although global economic uncertainties and geopolitical tensions linger, Jardine Matheson appears to bank on Jardine C&C's long-term growth prospects, especially in automotive and related businesses across the region. The parent company's confidence stems from its recognition of Jardine C&C as a quality player, evidenced by its casual yet astute brand voice exuding professionalism and deep insights into regional markets. There you have it, folks, the lowdown on why Jardine Matheson is doubling down on Jardine C&C. As economies bounce back, the parent company clearly sees long-term potential in C&C's automotive businesses across the region. Of course, we'll need to keep an eye on how factors like commodity prices and interest rates impact their performance going forward. But this increased stake shows Jardine's commitment to playing a major role in Southeast Asia's automotive future. Let me know your thoughts on these moves in the comments below. And if you found this video insightful, show some love by smashing that like button and subscribing to the Investing Iguana for more financial wisdom coming your way. Thanks for watching, and I'll catch you next time with another investing adventure. Till then, stay hungry for profits but not too iguana.